And as I said, for today's panel, we're going to be discussing a white sheet that we created. It should be in the chat as well. And it's about how we influence growth in the ECVC Africa market with the sort of like byline that we all know we want it to develop in a way that's uniquely African, and also in a way that eliminates some of the disparities and the challenges that we're trying to clean up on the US side. Bios are in the chat, but let's go around the circle here and do some introductions. I'm going to start with, oh, it looks like I lost Mope. So hopefully she can join. I'm going to start with Bahia and then go to Kojo, Vanessa, Jonathan, and Ed.
You start with me first, huh? Well, yeah. Okay.
Yeah, put you on the spot.
You did. Thank you, Rossi, Ed, and Lowenstein for hosting this conversation. I'm Bahia Yasmin Robinson, founder of the Include franchise, but my career actually in impact investing started in Africa. 2009, 10, 11, 12, I was building public-private partnerships around social entrepreneurship and saw this kind of technology application starting to happen beyond the infrastructure. We can talk about it a little bit later, but started to actually invest with the World Bank and State Department, co-invest with them in 2012, and started thinking about how to build ecosystems around this new generation of African tech entrepreneurs that were popping up. We were based in Uganda and Kampala, but quickly kind of spread through East and West Africa, both from our investments as well as through a lot of our ecosystem building. So happy to chat about that, but that's how I come into the space. I now have a larger platform that's mostly US gender and diverse led fund managers to help unlock capital and investment into historically underrepresented founders at scale. So that's how I come into this conversation. Thanks for having me.
Thank you, Bahia. Kojo. Oh, you're on mute, man.
Thanks, Rossi. Thanks, everyone, for having me. I'm a general partner at Ingressive Capital. We are an early stage VC firm based out of Nigeria, investing in the technological rails of growth in the ecosystem, mostly focused in Nigeria, Ghana, Kenya, and Egypt. We're also beginning to make some inroads into some secondary markets as these ecosystems come alive. My background is more on the venture/private equity side. Have been at it for over a decade. Have crossed many times our paths with Rossi, who's also been on the continent for a long time. Also important to know, on the technology side, I wear an operational hat. Prior to being on the investing side, I built and designed wireless CDMA networks, 2 to 3G, the prelude to 5. And I've always been on the technology, media, and telecom side of things. Thank you.
Vanessa. Welcome back, Mope. Sorry, we lost you. Vanessa, you're on mute.
Oh, hi. I'm not necessarily the same with everyone who's spoken, because every single time I come here, I just come here this is one of the things I do with Rossi and things I do with Ed. And I've loved and appreciated it every single year that I have done it, or every single time I have done it. So, hi, my name is Vanessa. I am Head of Communications and Growth at Ingressive Capital. However, I just ensure that we make sure that everybody has some level of impact from all of the many different awareness, knowledge, information that is spread across board, that every single person you're listening to is currently talking about. And I just make sure that everything is perfect and nicely put together. So yeah, with that precisely, it's so simple. That's what I am. Thank you.
Joshua, can we have you give a brief introduction next?
Thanks, Rossi. Good to be here, everyone. Joshua, as introduced, I lead ecosystem engagement and investor relations at Brighter Bridges based in Nairobi. Brighter Bridges is loosely a market intelligence firm that provides and showcases data about emerging ventures in Africa and other emerging markets. So happy to be here and contribute to the discourse.
I'm gonna switch up my order and go with Mope, and then Ed, you can, and then we'll dive in. Mope, give a brief introduction.
Yeah, hello everyone. Really glad to be part of the panel. My name is Mope Abudu, and I'm the founder, CEO of Night Ventures. It's a business accelerator, digital accelerator, as well as an investment platform. And we are passionate about supporting innovative businesses wishing to scale up and get funded to be able to reach global markets. Really, really happy to be here and support the discourse with our ideas.
Thanks, Mope. I'm Ed Zimmerman, and I am Rossi's partner at Lowenstein Sandler, where together with Deandra and Raquel, we have co-founded the Africa practice, which Rossi leads. I'm also a co-founder of First Close Partners, which is the world's only, to our knowledge, venture capital fund of funds that invests with a diversity, equity, and inclusion mandate on a global basis. And our second biggest geography for investment is, in fact, the continent of Africa, where more than 12% of our dollars from Fund 1 have been deployed into venture funds that include Ingressive. And before founding that, I was also an investor in Ingressive. I've also made a bunch of angel investments on the continent, and I'm continuing to do that.
Thank you, everybody. So we were sitting around talking, and there's clearly an ecosystem that's developing around Africa VC. I've been watching, for those who know me, the business of developing Africa for several decades. And one of the things that has been a thesis of mine for a while was that instead of it coming from the top down through governments and NGOs, et cetera, it really needed to come from the bottom up. Governments and NGOs could support that, but needed to come up from the entrepreneurs, from the people, from the youth, which is predominantly the continent. And I think we're starting to see that happen for the first time in about 3 decades for me, in a scalable way. But there's some challenges to that. One of the challenges is around deal flow. We hear concerns about the quality and the quantity of that. And some of the focus of those concerns is around the lack of visibility into available investment options, regulatory uncertainty, the time it takes to complete a deal. We want to talk a little bit about that, some of the other issues around deal flow. We've got several people who are investors on this call. We also want to talk about data, right? It's the information that drives deal flow, hopefully that eliminates some of the bias. So it's not just gut, which is often your gut is often your bias speaking, but actually has some information and data. Africa has been, for the years I've been doing, very relationship based. And that's a very positive thing in some way. The negative about that, obviously, is that makes it easier for you to get confirmational bias as your own set of relationships continue to feed on themselves. And so we'll have some conversations about how do we not end up like the Silicon Valley, which seems to be a relationship based between Harvard MBAs and Stanford MBAs. And we would like to see a more robust group of not only investors, but also founders and other people participating in the ECVC market in Africa. And then one of the sort of like big topics, because it seems it overlaps all of that, but it's a very big topic, especially when you look at the demographics of the continent, and that's the lack of gender diversity. it's notorious in Silicon Valley. We're not doing much better on the continent. I think the team dug up was since 2013, only 3% of early stage funding in Africa has gone to all female founded teams. 76% has gone to all male teams. On its face, that seems problematic. Like to have some conversations around how do we do better? And I think doing better is not only just for the good of the continent, I think it's also in the community, but it's also for the good of the quality of investments and ventures. I think that the more narrow a set of people who are participating in, and not to throw the dudes under the bus, but we have a whole lot of male African leaders, and we could do better. So that's my commentary. So, Kojo, I'm going to start with you, only because I've known you the longest, and so putting you on the spot is the easiest. It was either you or Bahia, and so you've been around the continent for a while. You've seen these three issues from a variety of standpoints. Throw against the wall a little bit more about some of the issues and some potential solutions. And then since this is a kitchen table, no one should be shy around this table. If people start talking over, just to those who are watching, I'm gonna be referee, but I hope this gets a little wild. So, you know.
I hear you. So I'll touch on all three. I'll actually start with the last one relative to female founders. It's an interesting one because in a number of sub-Saharan African countries, there's actually no local issue with female leadership, right? There is a reason why in some of these cultures, the queen mother picks the king, not anyone else, right? So there's no structural DNA issue in some of these countries with female leadership. I do think part of the bias seeping in from other relationships, be them colonial or not, or capital from across the Atlantic, may help basically keep some of those unwanted biases alive. However, at least in our portfolio at Ingressive, we're not seeing that. We're seeing great female founders forming great companies, and we're not actually trying to, necessarily chase female founders, but we have an amazing founder in the name of Maya, who just has an amazing connectivity to all the founders. And so we just have better data on which to work with and actually see, recognize, and evaluate female founders. So as a result, on average, we probably have more female-led companies in our portfolio, but we didn't go out seeking to make that happen. We just wanted good deal flow. And on a continent where I would say, maybe the World Bank can check me on this, but in a number of countries, if I had to pick a group of people that are actually, making the working capital happen from a trade and finance perspective, especially the heavy set market women, it is females making that happen. It's not necessarily the European banks actually putting that capital to work and lending to companies. These people are making accounts payable and other working capital structures payable for trade finance. So that's my slight 2 cents. Wanted to get that out of the way because I know there's other heavy lifters and expertise here who can take that deeper, but wanted to recognize that structurally at the DNA level, a number of African countries actually don't have an issue with strong female leaders. I'll pause there before I head to the other topics if anybody wants to add to that.
Yeah, I'll probably add to that. And thanks, Kojo. It's so nice when we get a he for she supporter, so to speak. But yeah, I think in the continent, women really are pulling their weight. But to really speak to the problem, it's really, there really isn't a problem in terms of the number of women who are thinking up great ideas. It's really to make them very attractive to the investors. And that really is about scale. So what we are finding out is that we do find the women leaders, but we need to boost their confidence to make sure they're thinking big. And I think the word is think really big, because that's when you start getting the attraction of both local and international investors. And that really is about understanding the market size, and making sure that whatever solution or whatever great idea you have has the potential to be sustainable across geographic regions, and make sure it's really scalable. So really, that really is what really needs to be done. It needs to be promoted. So women are pulling their weight. They have very innovative ways. I think it's just a genetic trait, but it's also to make sure that no matter how viable the business, it's a scalable investment, and it's something that's going to be sustainable across different markets, not just in its local area.
Agreed. I'll jump in as the other woman on the panel, at least right now. I think we have to be clear that gender bias is really signaled by the West. I think this concept of gender lens investing, et cetera, and the challenge with finding women that can scale companies, I think that is absolutely embedded in the US Silicon Valley model, where there's less than 2% or around 2% of women raise venture capital. And I think that's a challenge as well, because let's just be clear. I want to put this out there now. Venture capital is a relationship game, right? It is a relationship game, good, bad, or indifferent. You have to be connected to accredited investors. You have to then convince or compel, right, investor to back you. You do, to Mope's from her perspective as well, have to have a product, or at least a solution that at least seems scalable, right? And so there are a number of things that in terms of the value chain of from starting a company to getting to a venture capital check, that you have to kind of check all of those boxes. And I think the relationship piece, and I think wonderful large initiatives like She Leads Africa and others that are pan-continental are really important. But I do think that there is this kind of local, regional, how do you scale beyond local, regional, and even into global markets? And then on top of that is that gender bias layer, where it kind of pushes down that potential for increased innovation. And it's the challenge here in the US, and it's the challenge in Europe. I was just in Paris. This is a very global problem and challenge. So I think it's both unique in certain cases to Africa, but also I see it in other emerging markets and even traditional, more developed markets as well.
So I do want to add some statistics to that, to say that we are making progress, and I want to acknowledge progress when we make it. I think there's a stat that globally, or at least in the US, is 3% of capital going to female founders, and Ed or Rossi can check me on that. In terms of Black women in the US, I believe the statistics is 0.0027%.
Correct. Yes.
I'll repeat that again, 0.0027%. So in Africa, I believe we're at 3% of capital going to women. So compared to 0.002%, that's rough math. It's times 10,000, either times 1,000 or 10,000. I'm not saying we should rest on our laurels, but I do want to say that that makes the point we started with earlier, which is structurally at the actual operating level, there's no issue with female leadership, and we do need to make a better, do a better job of getting capital there.
So just to add to this a little bit, and I appreciate the prior comments. I think that 2% and 3% numbers, and the fact that they are consistent in two different geographies, or roughly consistent in two different geographies that are such dramatically different markets, is unsurprising given the general misogyny in venture, in tech, in the broader business world. And one thing I'd like to push on, I know Kojo said that, Ingressive has done a great job of backing female-led businesses and hasn't necessarily been trying. The thing I want to push on is, why not say we have actually been trying? We actually move through the world with intentionality, because without intentionality, we're not actually going to make a difference. And yes, if you are, so when Maya Horgan-Famodu, the founder of Ingressive, raised Fund 1, it was the single largest venture capital fund in the world ever raised by a solo Black woman GP in the world. And it was a first-time fund in Nigeria. That is at the same time a phenomenal accomplishment and a terrible statistic, right? Because it was a $10 million fund. And why not intentionally look for opportunities to back LGBTQ plus founders, to back Black founders, to back female-led businesses, to back intersectional women? I'm on the board of Black Women Talk Tech. I've been on the board since 2019, which I started mentioning the longevity of the board service in June of 2020 for obvious reasons in the States. And we've done research on funding to Black women who run venture funds and who start companies. And yes, the numbers always round to zero in the States. And without intentionality, without proudly saying, I am actually making an effort to change my deal flow, I am actually making an effort to tell my friends, why aren't you investing in Black women-led businesses? Did you know that most Black women who run businesses actually have other full-time jobs, actually have college and graduate degrees, and raise less money and go further on less money than their male counterparts and then their white male counterparts? I think the intentionality should be part of the conversation.
I agree with that. I just want to double click just for a minute or so on Maya. Maya is such a unique framework, and I think, a model, and back to this relationship piece. So I was with Maya 7 years ago. I hate to start to, talk about years, but in 2015, when at her first, she started to build this as a tour of tech, right? And so there was a ramp up of education, of engagement, of socializing. Again, saw it at the very first kind of inception of bringing Silicon Valley thinkers and players to Lagos, and showing kind of this fintech-led wave that was just starting, right? It was just starting. We had just started one of the first tech conferences on the continent. When I say we, I mean a larger Lions Africa, State Department, Microsoft, a bunch of corporates, public and private sector partners that were really trying to build infrastructure. And here you have, Maya understanding the Silicon Valley model and starting to create this bridge and socialization between, the kind of the fathers and daughters of Silicon Valley and, the continent. And it was really eye-opening. I mean, I won't talk about who was there on that trip, but because I was investing in Africa and I'd already kind of been, sprinkling some seed capital across the continent, her model of building the relationships, building the trust, building the education, building all of that infrastructure really allowed her over years, right? This is not a turnkey, framework to build the infrastructure to highlight, local tech. And it just so happened that despite, some of the regulatory and kind of instability, financial systems of the beautiful country of Nigeria, still there was able to be a takeoff of the Paystacks and the other, fintech firms that started. So kudos to her for really looking at building this long-term infrastructure and then layering on the capital. And I think that's a model that should be, replicated. across the continent and other places, because she was brilliant at doing that.
We were talking the other day, I mean, I think Joshua and Mope, you both talked about the ecosystem building and the aspects of what, and I think, thank you, B, for laying out one example of how and then we said something about relationships as being so important, which has also been highlighted in this conversation. Can we say a little bit more about both of those in terms of how it affects deal flow and the ability to get quality data?
Okay, Joshua, do you want to go?
Yeah, thanks, Mope. So the African VC and tech space generally, as Bahia mentioned, we operate on trust and relationships, right? So the place for collaborations and ecosystems cannot be simply underestimated. So of course, there's obviously a need for closer ecosystems or closer relationships between players in the market, because corporate information as it exists currently does exist in people's minds and in silos, right? So there's need to actually unlock that and provide incentives for people to share data, for people to share trends and what they're seeing in the market. And so far, what we've been saying is that the biggest incentive to unlock that is usually trust, right? So VCs, founders, enablers would work with people who have been around in the market and sort of share data based on that, right? So data plays a huge role in sort of unlocking missed opportunities, and to some extent, I think it also sort of feeds into the current discussion about funding disparities, right? Either to local founders, to local African Black founders, to even female founders in the market. So we see that there is a need to showcase what these female founders are doing, what local founders are doing, or even what some of the growth horizons are for underserved sectors that are not, more well-funded.
Yeah, and let me just write on that, Joshua. Thanks for highlighting the need for high visibility, and just to also support the need for quality deal flow. Trust and visibility play a huge part when we're really trying to showcase what can come out of Africa. And really, for the women, they need to get out of their comfort zone and be a bit more happy to network, or happy to liaise with people and showcase their achievements, because there's a lot happening, but sometimes they don't go on the right platform to really showcase it. And so long as they have the right platform and the data is showing the transition between early stages and how they've grown, it creates that trust, it creates that authenticity about what they're doing, and creates a better platform for them to attract VCs and angels to pay more attention to the opportunities that they're offering. What we've found is that working with early stage founders is they really need to marry both the business and the technical aspect. Sometimes they get their heads really into just formulating the solution and not really pay an equal attention to the business side, the visibility. And it's really a networking platform. You need to understand how to network, how to reach out, and how to really succinctly showcase what you've been able to do. And that's really the platform that would showcase African ventures to the world.
I want to say a couple things, because I think sometimes people have a lot of anxiety when we talk about networking, right? And because sometimes we think there's one way or another way, or this particular way to network. And so I'm just going to unsolicited advice for everyone about networking. There's a way that you as an individual communicate to people, that you engage people most comfortably. You should stretch yourself out of your comfort zone, but you should figure out what your comfort zone is and start there. find opportunities to do that, but in a business sense, in a way consistent with whatever the ideas you're trying to promulgate. So if you're a person that likes to just, meet people for cocktails leisurely, try to do that on the business side. If you're a person who likes to get on the phone and have more in-depth conversations, try to do that on the, so start from your comfort zone, but then stretch yourself into non-comfortable settings, and see if you can get some success. There's not only one way to network for those of us who are more introverted than those of us who are more extroverted. There's a variety of ways to do it. Find your core way and then stretch yourself out of it. I want to say that because I see a lot of anxiety sometimes when I talk to groups about networking, and so there's still always do it. I want to, which is a segue to something about being intentional. And then Ed mentioned that earlier in the investment setting with women, but like a lot of this conversations about how can we be intentional about driving ECVC in a direction that it is a better version of itself, right? And so we talked about, your networking. That's an intentional act, though. You got to be intentional about it. The types of investments that we look at verticals we may want to invest as investors. That's very intentional. I like what Ed said about we can be intentional about other characteristics as well. If we really believe in the thesis, let's be intentional about it. Ed, you didn't talk in detail about this, but you've been investing for a while on the continent, as well as some of the other ones. I think last time I checked, out of the 10 unicorns that came out last year, you were in at least directly and indirectly in 3 of them, I think, and got in fairly early, which would strike me that there was something intentional about that. Say a little bit more about what was your investment thesis. This how did you find that deal flow? How did you get the data to back it up? Because that was early, and I think that that would be a good example for some people and some of the issues that you had and what we need to try to fix.
Thanks, Rossi. So the deal flow piece in Africa is interesting. Because I don't think this is a great example of the intentionality that I was talking about, except to the extent that because people knew that for years I had gone out of my way to invest in underrepresented managers in venture and founders, I was introduced to Maya, and I actually had a network of people that knew Maya who were themselves underrepresented and who I had known for years. And so Maya, hit my radar. And then separately, for very similar reasons, was introduced to Pardon Makumbe at CRE, another phenomenal early stage venture fund in Africa. And knowing 2 of the leading seed and early stage VCs in Africa tends to ramp your freaking deal flow. So I saw some of the dynamics in the market in Africa, which is things like under coverage of phenomenal startups by myopic venture. That I had seen in New York 15, 20 years ago, and in Europe a dozen years ago, because I've also been doing some seed investing as an angel there. The talent distribution in Africa is amazing. The academic credentials of the founders in Africa is amazing. The ability for impact and for any investment to be about inclusion is amazing. And there is a discount that is put on companies in Africa because Africa is overlooked as an economic opportunity by so many in the startup and venture ecosystem in the States, which is where roughly 2/3 of all the venture capital sits, and in Europe. And we've talked a little bit about data. People in the States wait for data, and you're going to see the predominantly white venture and growth funds come in when companies have 20 million, 50 million, 100 million in ARR, because then it's about data. They don't have the vision or intentionality to come in pre-revenue or pre-launch and recognize that an amazing founder is an amazing founder, that a great technology, a great idea, a growing market. They don't see all of those things. They wait because of their risk profile. They wait for massive quantities of data, and they will come in at late stage to do that. So I think part of why I ended up doing what I've done in terms of just my personal investing in Africa is because for decades I've been building a truly differentiated network in tech because it is not majority straight white dudes.
And profiting, I think that's it, right? From that, right? So that part of it's this massive market opportunity, right? Which has to be front and center, because I think that's the signal that gets lost because of all of the bias saying, well, we don't know the continent, or we don't know Nigeria. We put 500K to, ag tech startup and, in Kenya, where's our capital going? Is that differentiated network has given you this differentiated deal flow, which is really, I think, an important point.
One of the things that I think is challenging, and Ed, you just kind of brought that up, is that, and back up, when I first started looking at this, there was a bunch of money. This would be around 2000, 9, 10, 12, bunch of money flowing into PE, right? And a couple of $1 billion funds actually were raised. I think Carlyle raised $1 billion fund, and some other announcements about it, Blackstone, et cetera. And then my view at the time was like, well, those funds were actually too big for what the deal sizes they're going to find in volume there. And it was a big announcement. They raised the money, and then they, as predicted, started to complain about not having the deal flow, right? And it was because what was missing was the money going into the companies to start up, to get going, so that 10 years later they can be picked up by these $1 billion funds. So they start at the wrong spot, right? And so then the only thing they could find was big infrastructure deals and mining deals and dams, stuff like that. And it's like, what we needed was more $50 million funds, $25 million funds that were doing seed, pre-seed, et cetera. And the concern is, although we're a lot closer now because we're at VC, is that can happen again, right? Which is like, we still need a much more robust angel network across the continent. We still need a much more, we could use some more seed, pre-seed funds, right? Or larger seed, pre-seed funds that have the ability to deploy a lot broader. How do we get, because that's a different group of people that actually believe in a thesis already, that aren't like waiting for a certain level of confirmation. They're a different level of what would be considered risk takers, although some people took risks on cell phones Africa some years ago and did kind of well with it. What's the fix for that, right? What's the fix for that, folks? You're smarter than I am.
So I would say part of it is just getting going. That light has been lit in the ecosystems in West Africa and East Africa and Egypt as well. South Africa has been online for a while from a VC perspective, but this ecosystem is newer. I would say we are in the third or fourth inning. And that's exciting because you have firms like Ingressive that are doing two things at the same time. One is making sound investment decisions, but also investing in growing the ecosystem as well, right? So there's a whole other arm of the Ingressive ecosystem that is Ingressive for Good. So we aim to train over 100,000 students every year with tech skills, right? And that compounded over the years means that after just 3.5 years, we finally made an investment into a seed investment into a company that came out of the Ingressive for Good network, right? It was built primarily for our tech partners, much in the same way that Maya was helping put the ecosystem together in 2014, 15, 16, and got really, formalized into a non-for-profit, right? So it's also a network of students and kids who can then provide one of the single most valuable ads for a founder, which is talent, right? You're trying to scale something, you need to hire somebody. So we're taking that approach and investing in the ecosystem while also making sound, investment decisions. And it takes localized or local facing VC firms to then take a look at, okay, where do we want to go next, right? Those who have been around Africa for a while have been excited about, for example, Ethiopia, right? Nobody expected the kind of stuff that's going on down there right now to happen. That said, for folks who are serious about this, we're going to wait that out. There will be good deal flow that comes from Ethiopia. There will be an innovation that happens. And we put a flag down to let people know that we're watching, we're waiting, we're praying for them. And when they're ready, there will be capital for them, right? We're looking at Francophone countries as well. And in places where you would not expect, where we see some of the similar dynamics that preceded West Africa and East Africa from a data perspective. We also learn from what's happening globally. Pakistan, for example, of all places, is seeing a bunch of seed capital money right now. And when you think of Pakistan, you're thinking about 9/11 and Osama bin Laden, but there's capital going there right now. If you look at Southeast Asia. So there's places where we can take data, make sense of it, and apply it to what we're seeing in Sub-Saharan Africa as well. I would also say that the angel network is growing and improving. Part of that is success begets success, and we should all collectively be louder about when our founders are successful, because now you have founder networks that are seeding other founders, right? Back to your data question and deal flow question, the majority of our great deal flow is through founder referrals. And the number of founders that we invested in over the years and put in the ecosystem just keeps growing. And the number of founders who are able to exit also keeps growing. And that's what you need for that flywheel, right? Is for a kid to grow up thinking, hey, I can build my own company. I do not need to go be a government official in one particular region or the other. And that's very important. So we see all the above happening.
Well, let me just jump in on that. And Rossi, thanks for highlighting the need, really emphasizing the need for early stage, and the angel network funding too. It's such a critical need to unveil the mirage of opportunities that are coming up. The ecosystem is it's still at its early stages, but it's very dynamic. And just like Kojo has said, founders are moving away from just being founders to also being co-investors. So there is a big brother, big sister kind of relationship that's growing up. And what's very critical about it is the peculiarities of the terrain come through experience. So they're able to navigate younger founders in supporting them and also attracting, some of the relationships that might have helped the original founders while they were building up their own businesses. And that's how the ecosystem is just getting bigger and very deliberate on how businesses get funded with the VC funds coming in. But I think what's very, very important is that you can't run away from it. There has to be an African affinity for it. If you're only going by just the data and the numbers, you will probably miss out on some of the diamonds that may come out. So there has to have that, African affinity. And just like Ed had said, he was deliberate about looking about particular areas. And if you look deeply, you will see that there are specific areas that you can look at. There's so many issues that need to be solved in Africa. And the good thing is the population size is very attractive. So if any founder is able to crack that issue and be able to articulate their proposition properly, they do have a good chance of navigating the whole ecosystem to attract, the right kind of funds. And at Knight Ventures, I think that's what we really want to do. It's African focus. Is try to make sure that we are able to demystify the issues about, VC funding in Africa. Yes, data and risk is important, but early stage investing can actually turn out to be quite profitable, at the end of the day.
Absolutely. I just wanted to hop in and double click a bit on one thing that we haven't really talked about, but I think ecosystem is at the very foundation of it, is both the supply chain and value chain of capital. And I think, Rossi, you talked about it a bit, and I think we met probably around the same time, 2010, 11, and you were kind of at the top of the food chain in terms of M&A, right? You were doing like these big deals. And the question then, when we were doing all these smaller checks into first generation of founders, was how do you connect, right? How do we actually think about building tech companies that are solving problems that can be scaled to be acquired by the TPGs, the Helios, the folks that are at the top of the food chain with a lot of capital looking to deploy into later stage companies, right? So there's such a big bridge between the two. And I think a lot of our early conversations was about, again, this kind of ecosystem connecting and how our local communities, empowered to think that way, right? When you've got a local or regional perspective and are trying to look beyond, again, Uganda, Ethiopia, even Nigeria at the time, to build things. And I think Nigeria just did such an incredible, job from an industry perspective of doubling down on payments, doubling down on fintech, right? And making sure that the solutions that many of those founders were building in those early days could be scaled. And we've seen what's happened. I think when we talk about agri-tech, we talk about, other things that connect to things like real assets, infrastructure, supply chain, all of those things. I think we're starting to see a next wave. I'm really excited about the next 10 to 15 years of venture across the continent, because I think a lot of these ecosystems, angel networks, obviously new venture firms that are popping up are really thinking about that. I mean, that's how you get outsized returns, right? Is to be able to connect the dots to your early stage founder and see how you can help them plot up to, a larger acquisition or exit. And so again, more broadly, I see that happening. And I think these conversations and Ingressive and Knight and other on the ground venture firms, particularly that are focused on early stage, but understand how to kind of navigate that supply chain and value chain, are really going to be the ones that, win big over the next decade.
One of the things I've always advised people, well, maybe not always, but definitely for a couple of decades now, who are doing stuff in Africa, is that you can't just look at your narrow space of whatever it is you're trying to do or issue you're trying to solve or business you're trying to build, because it's not going to be the primary things that are going to be the real challenge for your business or for your deal, if it's just a transaction, or for whatever the activities you're doing. It's going to be the secondary and tertiary things, because what you're doing oftentimes is you're coming from whatever environment you're in, you're making certain assumptions about the secondary and the tertiary things. And once you start getting to a level where they matter, you realize that there's gaps. They're not there. And so for those of you who are listening to this, one of the reasons why Ingressive is doing other things is because there's gaps that are there, right? They couldn't just be an investment, a VC. They actually have to be doing things to build out ecosystem, because that's controlling the gaps. Us at Lowenstein, we're not just trying to practice law and helping people who are doing cross-border transactions with Africa. We're also doing other things like this conversation and other things you'll see in the coming weeks, months, and years, because there are gaps that we know just from smart business need to be addressed, right? it's a de-risking of what you're doing. And so if you're starting up a company and you're trying to scale dramatically, which is what the idea here is in VC, you need to be mindful of what the gaps are that are going to create problems for you down the road. And you probably should be doing something today to address those so that when you get there tomorrow, they're not as big of a hill to climb, right? That's what so many people are having problems with. They get to a point and they hit one of those gaps and they had no preparation for it. And it can be a momentum killer. It can stop your venture or your VC fund or whatever. That's one of my practical pieces of advice. And that's where you get the ecosystem relationships, because there's other people maybe addressing those gaps. You don't have to be primary on it, but you start supporting them in doing that. It is the other way. And I see you want to jump in.
Yeah, I do. I want to tie a couple of threads here, and I love what you just said, and what Ingressive is doing. And I think this also ties in to a really important question that Dana Reed underscored in the chat and said one answer is to fund Black female growth equity funds like mine. So at First Close Partners, which is our fund of funds through which we've invested in over 80 venture capital funds around the world, each owned 50% or more by underrepresented VCs. And it is a capitalistic endeavor. It is not a charitable organization or nonprofit. We have made money with our managers. One of the things that we do is we're constantly in conversation with LPs who invest in other funds. And the biggest question that LPs who don't invest in a portfolio of predominantly or materially underrepresented managers is, how do you get comfortable with someone who has not already developed a 5 or 10 year track record investing other people's money, OPM? And the first answer is, well, if you want to invest in underrepresented venture investors, you have to get over the fact that most of the folks currently in market don't have a 10-year track record of investing other people's money or a 5-year track record, because we are racist and we have kept people out of that market. And we have not had a major showing of funds started and run by people who look like me, where the transition to the next generation, Kojo and I were in a conversation last week where I posed this question, and we talked about it a little bit, where people who look like me started the fund and then handed the keys to people who look like the other panelists on this call. I can't name the funds where that's happened in venture in the world. So we can't look at it that way. We have to look at other things that indicate success. So the fact that Maya raised the largest ever fund in the world and did so in Nigeria, and the fact that Maya had these proof points because she was bringing public companies onto the continent and large tech companies onto the continent and introducing them to amazing startups, and then business deals were happening, and then she was making relationships with venture investors in America who would be her up rounds. Those are leading indicators that this person is going to be an extraordinary steward of capital, an extraordinary investor. And one of the responses when I have those conversations is, oh, that's interesting. Our framework is so focused on how do these people plug into the existing network in Silicon Valley, not how do these people create Ingressive for good and give computers to students and support scholarships and do all of these other things that are building the soft and hard infrastructure around them, not how do these people create these two-sided markets where nothing existed, which, by the way, is so much harder than getting invited to the right party in Silicon Valley or San Francisco. It's a completely different framework, and we have to have that framework of looking for what are the indicators that we have, and you do have to build in multiple dimensions at the same time, because you're not plugging in to as robust a fully developed venture ecosystem, whether it's in Africa or frankly in Paris, which now has a much more robust ecosystem, but similar 10 years ago, or in Pakistan. And I think that it's really important to acknowledge that, which goes to my last point, which is the question of how do we tie in US and African businesses. And this was a question also raised in the chat by Lori Ramos. And Africa is critical. And I would like to see if our panel can talk a little bit about creating those tie-ins. For me, one thing is be loud about your enthusiasm for doing stuff in Africa, and then actually do the shit you say you're going to do about it, like teaming up with or investing in or engaging in real research and conversation about what's going on there and proselytize for it. What are some of the other ways that we can drag other people into the conversation, and some of the other ways that we can foster greater collaboration, because that is going to fuel the growth that we're all looking for, all on this call, looking for in the market in Africa.
Yeah, I want to add to that because Ed stole my next point, so I'm just going to ride it now, which is I think so. I get the answer now. First of all, you got to recognize that it's not a local only activity. This is a diasporic activity. If it's really going to be able, if you're able, just like you're saying, I'm trying to do this venture, I need to scale it. You also need to be thoughtful about how you're engaging at scale. And the easiest way for me in my mind is it's diaspora, baby, as opposed to it's not African Americans in New York or in Harlem, well, which is where me and Kojo sit a lot of our time. No more than it's Africans in Lagos. It's a diaspora, because all the pieces we need may not actually be in Harlem, may not actually be in Lagos, may not actually be in Nairobi, may not actually be in Kampala, but they are in the diaspora. And starting to harness that those abilities, those talents, whether it's and other resources, I think that's going to be critical for us accelerating this development and actually getting it developed the right way, what we consider to be the right way. I'll call it the right way because I'm hosting this, so I'm going to call it the right way. I'm going to take a position. But that would be my overlay. First of all, I'm going to give you a real quick. I realized at one point in time that the only people I was meeting that were doing things on the continent, by and large, not the only people, but by and large, the most people I was meeting was on my plane ride back from the continent, either to London or to Dubai or to New York, right? And then I'd meet all these people that look like me that were doing interesting things and other vertical that I could never find. And so one of the things that me and Bahia started doing some time ago was hosting dinners with just those people, right? Like, okay, oh, you're somewhere around New York? Oh, hey, let's have a dinner and let's talk, put a white paper down, talk about it, and meet all kind of people. And it turned out to be such a rich experience. And there's things that each of you can do that you won't know how it's going to add value later, but what we're trying to do is to build an ecosystem, and everybody's got to become a bricklayer. You're not responsible for building the whole wall, but you are responsible for putting down the bricks around you. I'm going to stop. I think Kojo and others, I saw some, Mope's already ready to go. I'm going
I think we're all fired up now.
Yeah, I get really excited when you're speaking to exactly what we're passionate about, and it is true. Ed did mention that you can't really be so myopic and just think at the tail end. You do need to spread your wings. You do need to midwife the whole process, so to speak, in order to make sure that the outcome at the end is what you're looking for. And it means navigating all the issues that will make these businesses investable. That's a word that's always kind of, flouted about, but what really makes them investable is, midwifing and looking at some of the other areas that really aid these businesses. So just like you said, they're a law firm, they're capitalistic. I heard that very clearly. But in order to make sure that pipeline of, returns continue, they need to look at other areas. And that's really what we stand for. And that's the peculiarity about, the African market. Talent is critical. You need to make sure that the value chain is looked at to make sure that there's a continuous process. And that actually might mean collaborations between businesses, and that collaboration enhances, the outputs at the end. So you need to force that unison to make sure that you have a better take. And what we do as a business accelerator is to make sure that there is a continuum of deal flow at the end. But we would use everything from data, from relationships, from market understanding to networking, just trying to put in all the different ingredients into a pot of stew, so to speak, to make sure that it turns out, pretty tasty at the end. And you have, a queue at the end of the day, asking for more. So that's the peculiarity about the African nation. But each one of these founders of businesses or ventures do better when they are linked up together, and playing the role of a midwife, playing the role of the aggregator, so to speak, and bringing all of them is how we would have a better deal flow at the end of the day. That's just it.
I think that another thing, and this ties up the midwife concept, which is interesting, it's like someone who's, you're sort of standing in the gap between, mother and baby, and making sure that everything happens correctly. We talked about some of these bridges that we're missing. If you're trying to scale from, I have an idea, to I'm a global company, and they're just like big canyons that you had to figure out how to get across. There weren't clear paths. And one of the things I think that's a real opportunity that people are missing is each one of those canyons is an opportunity to build a bridge, and some of those bridge building exercises can be monetized. And so for founders that are looking to create solutions that could be done at scale, there's a solution at each bridge, or a host of solutions, right? There's a business at each bridge. And I'm just going to challenge some of the people who are listening now, is like, is your idea helping solve one of the bridge problems? Or is there a way your idea can help solve one of the bridge problems with a slight pivot or something like that? There was something else in the chat that talked about how we measure success. And obviously globally, one of the flat measures of success are you a unicorn valuation, right? But we also know, because of racism and other things, that companies are probably going to be getting a little bit of a discount for at least some period of time in Africa. And so the unicorn thing may not be really measuring the true value of an African company. And I think we should think more about that, how we're measuring, especially as investors, how we're measuring what's a success for a company. It should be in our milestones we're asking for our companies to hit, right? Some of those things, it's not just, some of the regular things that are, the revenue, it's not just, but there's some other things we should look for, because I would suggest that if the company is not adding to the ecosystem, it's basically like a tower that's being built on a very fragile foundation. It's pretty thin going up, and heavy winds or other stuff can snap that. But if you have a big, deep foundation or a broad base, that's you actually are helping develop the ecosystem around you. The pyramids have stood for a while, right? Big, broad base. Some of these needle structures, they're laying on their sides. Some of these obelisks. So I want to make that point, right? And how we think about what we're doing. There's something that I haven't seen in a chat I was expecting to come up, which is the typical founder question, is if I'm at one of these gaps in funding, and since we have so many investors, what can I do to get myself to stand out in this particular environment that has some challenges and some gaps. And what can I be doing to help myself bridge those gaps, but also to get myself to stand out where I get some funding? I want to hit that question because that comes up so much from founders to me.
So real quick, I would say, obviously connect with folks like Ingressive. One of the things that we do apart from helping build the ecosystem is making our executives available to founders to help them on a personal level, right? To tell your story right, to get your deck right. We realize whether we make the investment or not, the more founders that actually make it to the next stage is just better for all of us. So we have an amazing member of our team called Vanessa. She was early on the call, but she definitely works with founders, especially portfolio companies, in helping bring them up to speed. We use our LP base, we call our LP army, quite strategically. A number of our LPs are themselves GPs with a mindset of knowing that we're going to do the heavy lifting in the early stage, and then they can come in the later stage. And that helps gives visibility to our founders as well. And a program that we can add to that, and we certainly are collecting the data to make that happen, is to expand that to the broader question of the diaspora, right? If we were able to use the diaspora in the same way we use our very diverse LP base, that would be some of the bridging we're talking about that Ed refers to, that Rossi's talking about as well. We need to collect that information, and we have vast information in terms of founders and folks who are investing in the network. But it's something that we need to roll out at some point. Much in the same way we use our LPs, there's no reason why we cannot develop the mechanism to enhance or at least use the diaspora as well.
Joshua, you're close to the ground on some of these founder issues.
Sure. So there is space for founders to be visible in the market, and in a regime where social media has actually made things easier. I mean, why are you not active on LinkedIn, on Facebook, on Twitter, right? Investors are also present on these platforms, right? So a critical piece of feedback that I will give to founders who are underserved is that don't wait to submit that pitch deck on the contact form on websites, right? Connect with the investors on the social media, post actively on what you're doing, and engage them in terms of updating the whole ecosystem on some of the initiatives that you have planned out. And just to circle back on how we can actually better catalyze the early stage ecosystem, I would want to add one point, one around democratization, right? So gone are the days through which angel investing was an exclusive club of high net worth individuals, right? So we are seeing increased efforts, especially in Nigeria, where folks who have a good understanding of tech and investing can actually participate in deals with as low as $1,000, and this is through angel syndicates and clubs, right? And this also sort of feeds into the point that Ed was making earlier on how can we actually build a track record of fund managers who might have not actually raised their first institutional fund but have skin in the game. And this is one of the ways, making sure that they have been around in the ecosystem, putting in small checks, building portfolios, building networks within the founder communities, and this will sort of spill over. And we're already seeing it. We are seeing quite a number of pre-seed and seed funds being raised by serial angels, right? And I mean, talking about the likes of Zach from Launch Africa, etc., right? So there are already use cases in the market or on how we can actually catalyze the angel or rather the early stage space.
Yeah, I think you made me think of something, Joshua. In the US, we have the Jobs Act, which is kind of like regulates how you can bundle capital, etc. I think that probably every jurisdiction, so I'm not going to, the lawyer hat on me and say I'm not going to step out on what your particular jurisdiction restrictions are, but I would encourage everyone in your jurisdiction to figure out if there's ways to crowdfund. If you don't have access to large pools of capital, a group of you, I mean, one of the interesting things may be a group of founders who are interested in the space, but also crowdfunding to put capital to work to, frankly, they could back each other, but they also could back others and help develop an ecosystem. The point being is if there's activity that's being seen in an area, it's more likely, this is one of these weird things, like if you're just gathering all for yourself, it's less likely the capital is going to flow into your area. But if you are actually creating a lot of activity in your area, it's more likely that multiples of capital will flow into that area, because the one thing capital is quickly attracted to is activity. And so, and in some spaces, there seems to be some benefit of hoarding and closing in. This is not one of them. The more activity, whether it's you or others, it just creates a more robust system for you to have capital to access yourself. And so people should be thinking about ways that they can increase that capital flow, even with the small dollars they may have access to. And the simplest thing that comes to mind is crowdfunding. With then the lawyer and me saying, there's just check locally to see what regulatory issues there are around crowdfunding. But to the degree that there's that opportunity in your jurisdiction, you may want to start your own, investor club, angel club, and get some small dollars to work to help some people get going and start that flywheel, to use Kojo's term. Kojo, I saw you were leaning in. It's just...
Oh, listen, I wanted to circle back on something that said earlier, and just want to clarify that we actually are quite intentional about finding underrepresented founders. We maybe we could be louder about it, but we do that, to be fair. And we are specifically, at least on my part, happy to understand be the sexist or the racist notions and specifically go for that rock and look under it, because I know then I'm one of the few people looking at that rock, and then I can then apply my investment hat and make good decisions. But that's important to know. It's not by mistake that we have a bunch of female founders in our portfolio. What I meant to say is that we didn't invest just because they're female, but we definitely have a thesis around looking where people have been underrepresented, but specifically where we believe discriminatory practices to be, so that we can be one of the few looking and profiting from that, or at least turning that into a positive.
So let me dive into the discomfort here and also clarify that I wasn't calling you out. I was taking an opportunity, and I'll explain. So first of all,
no worries, all love.
and right back at you, and Ingressive. It is not a coincidence or an accident that I am the only white dude on this panel, right? And it is not my place to suggest that a Black-led, Black-owned fund in Nigeria needs to be intentional. People who look like me and people who grew up with my network need to have a level of intentionality and need to talk about why it is valuable to have a level of intentionality, because we typically do not. And the network that I would normally be shunted into, normally devolve toward, is a very different network. And having intentionality and pursuing it is going to change that network. And it bothers me when folks who do look like me and who do present as straight white dudes say, oh yeah, we just happen to have funded underrepresented folks or we just happen to have done business with underrepresented folks and we weren't even trying. Like, why the hell weren't you trying in a country that has spent the last 400 years profiting from human trafficking and enslavement? Why weren't you trying? Why do you feel awkward about saying that you were trying? So it is a different obligation. And I think that because we have a preponderance of the cash, we being white folks, have a preponderance of the cash and a disproportionate preponderance of the seats in Congress, in the US, in the Supreme Court, in CEO suites around the country. We need to do more on this and talk about the intentionality. So I want to focus my points, and like I said, drive into the discomfort, because there should be more of us here for a whole bunch of reasons. And in this, and I will quote from a case study on CellTel, which I taught in the business school at Columbia, where I've been teaching venture capital for 17 years, and I taught it for years. In this investment thesis, my heart, mind, and wallet are interwoven.
Thanks, Ed. That's excellently said. And yes, Rossi, that's feel free to dive into more discomfort. For founders listening out there who think you don't fit the profile, I also want to give you a shout out. When we back tested some of our processes and looked at how our investments were actually performing, initially the stereotype would have been to go find the Harvard MBA who's moved back to Ghana or Kenya or Nigeria to make that investment. In real life, it turns out that on balance, locally fed, right from King's College, are kicking ass, forming great companies with great exits. So I don't want anybody out there to feel that you are any kind of underrepresented. The significant thing here is to dream and to want to grow and found your own company, and to have an exit. And there's an ecosystem that's growing to help you do that now.
Thank you so much, Ed, for being vocal, unapologetically vocal. I think that's really what makes founders and investors, that are, disruptive, stand out. And I think really the name of the game right now is, being comfortable to be uncomfortable in disrupting the status quo. And that's where innovation really plays a part. Just staying within the comfort zone doesn't really make, a very interesting environment. And the world really needs new ideas, new solutions. So founders, just like Koja said, are really encouraged to think far and wide, to be disruptive of, the regular norm, and apply yourself in really being laser-eyed focused on providing a solution, regardless of what used to be acceptable. And you will find allies, and you will find those who will support your ideas and fund the ideas. And I think what Ed is actually saying is, yes, being intentional you would find those allies to go through, and they just might be the solutions that people have been yearning for. So founders, business ventures, feel free to take things apart and put it together the way you find fit. We're also very happy to support innovative ideas and challenge you, to think out of the box, so to speak, and play an early stage collaborator in doing things differently.
Joshua, Bahia, you guys want to get on the last word before we wrap up?
Joshua, I know you've been.
Sure, thanks. So I would also like to, in a way, go back to the discussion around partnerships, because relationships, trust is a critical element of venture and tech in the continent, especially speaking into Dana's inquiry about how founders or even investors in the US can partner better. And I would say that the majority structurally of the companies that have raised funding in Africa are already have ties with the US, be it by way of registration or in one way or another, right? Then secondly, we are seeing more founders who are keen on building for the global arena, right? So, and this speaks to the founders who are building in otherwise underserved regions, right? Where there is very little market in Africa. They are building for the whole of Africa and the whole of sort of the world, so to speak. So there is a huge opportunity to reach out to those folks and explore ways to partner.
Here.
Do we have time? I want to double click on all of it. I mean, I think, building bridges, being a builder is what founders and venture, capital firms do. They build portfolios, they build value, right? They add value to their companies. They help to map, and for the best of them, the types of companies that will grow and scale. And I think, whether you're talking about Ingressive, Alethea, Atlantica, Arua, Lofty, I just wrote Dagame, CRE. There's so many new firms that are coming out to help in conjunction with some of the incubators and accelerators to provide early stage capital. So I think making sure you have, a holistic view of some of those capital sources is another way to get a leg up as a founder. And I think, the same thing is happening, by the way, at the manager level. And so we work with dozens of African funds throughout our global network and are really looking to think about scale. So we're working on multiple levels to solve this challenge.
And I want to thank each of you, Joshua, Ed, Kojo, Ope, Bahia, for adding value, for the networking that you help build, for the different ways that in this conversation alone that you have enriched the ecosystem. I also want to thank everyone who attended. Looks like there's a ecosystem of 60 plus. And I want to thank all of you and encourage you to continue to put your bricks on the wall. And look forward to seeing you in person at some point in time. And but until then, to seeing you the next time we host a Venture Crush Africa Global event. And until then, let's all do our part. Thank you. Thank you for attending.